Hey guys, and welcome back to the Layah Heilpern show powered by Icon Plus. So a really quick news announcement for you. So while the largest banks and companies in Korea are accelerating the adoption of Icon's DID service, Icon is also launching 3 DeFi projects in Q1 of 2021. So decentralized identifiers could take DeFi mainstream as it's secure, easier for institutions to onboard. So great news always coming out of Icon there. So I also want to say thank you to my sponsors, BlockFi. So I actually use them to earn up to 8.6% interest on my USDC. So USDC is a stable coin which is pegged to the US dollar. So I'm going to leave a link in the description, a link in the comments, a link everywhere. So if you guys want to sign up for them, you can. You can actually get up to $250 at the moment, depending on how much money you deposit with them. So I think that's great. And before we bring on my very exciting guest, I want to just give a huge shout out to CoinFlip. So they're doing some incredible work across the states to push Bitcoin mass adoption. They now have 1,200 Bitcoin ATMs, which is really cool across the states. So giving everybody access to Bitcoin. So I also have a discount code for them. You can get 10% off your transactions. So I think that's great. So I will leave that. I'll leave that in the comments below. So I'm going to introduce the guest today. He comes from the traditional world of finance, caused a little bit of a stir online recently on crypto Twitter. He is a former Goldman Sachs executive and now actually has 98% of his portfolio in crypto. So that is insane. It is the man that's based in the Cayman Islands. It is Raoul Pal. How are you doing?
I'm great. How are you?
I'm good. I'm good. It's hard to get all that out, you know, but I'm glad to bring you in. How is it in the Cayman Islands? How are you doing?
It's great. It's actually freezing cold right now. It got down to about 24 degrees, which for us is like the depths of winter. But hopefully it'll go back to
30
degrees.
24 degrees? That's bad. That's amazing. Are you talking like actual degrees like we do in the UK?
Yeah, Celsius. So that's freezing for us. I'm wearing jeans today. That's not normal.
Oh my God, you're living the dream out there. Well, I'm back here in the UK and it is absolutely freezing. So yeah, I want to talk about your journey into the Cayman Islands because you're one of the biggest names in finance, you know, from NatWest to Goldman Sachs to Real Vision, and it all started at Plymouth University. So I want to go back and I want to understand how you got to where you are today, and what are some of the biggest challenges that you faced and how did you overcome them?
Well, the story is I took my for English people, they'll know what this means. They're A-levels. So that's the exam you take at about 18 years old. I had discovered cars, pubs, and girls, so I failed all of my exams. And I had to go and retake them at a crammer in London, in Notting Hill. I then cobbled together enough A-levels to get one university offer, which was Plymouth. So that's the only place I could get into. So I went to Plymouth. Came out with a decent degree in economics and law from Plymouth and graduated in a recession. And I wanted to go either into finance or marketing. My dad was from a marketing background and I was quite interested in that. But finance, you know, it had been the end of the 80s and it had been kind of everybody driving Porsches and it was all very exciting. So I thought that's what I wanted to do. So I spoke to a friend of my dad's at his birthday party once and said, you know, what should I do? I'm thinking about marketing or finance. He said, Raoul, it's really easy to think about because you can go and work for a company like Mars, fantastic marketing, and they'll give you free Mars bars. Or you can go and work for a bank and get free money. I was like, okay, that's what I want to do. Problem was, I went to a bad university, well, not a great university, and a recession, and there were no jobs. So that made me think, okay, how do I get to where I'm going? And that started my journey of living in the future, where I started thinking, okay, that's where I want to be. How do I get there? And actually what I wanted to do was work for Goldman Sachs, but they were never going to take me. I already had a drawer full of 200 rejection letters from everybody. And so I had to figure out, okay, how was I going to do it? And I managed to get on the graduate training program for a company called Dow Jones Telerate, which is like Bloomberg. It was the number 2 in the marketplace at the time. And I managed to get in that and then eventually talked my way into a trading desk where I was doing equity derivative sales. And I was doing that for 6 months, started doing quite well at it as a salesman. And then my boss left and I was made head of the desk.
Oh, wow. That's convenient.
And I think that is a big opportunity. And that's what kind of launched my career.
That's insane. I think like you kind of have the playoff here between luck as in like good timing, but then also preparation from yourself, right? Because like you said, you had all these rejection letters, but you were still sort of like, no, I'm gonna push through. So if you had to weigh up luck versus preparation, which would you say came more into play here?
Actually, it was very difficult to get luck when you graduate into a recession. So that was more cunning than luck. And then luck plays a huge part, but it's leveraging luck that plays the biggest part. So once you see the opportunity, then you can start to really leverage it.
Yeah, I hear you. But there's this idea, right, that in life, we've got to get a good, stable job. We've got to work that 9 to 5. And once you work that 9 to 5, then you're on the right path. You're doing the great thing. But slowly people are sort of waking up and saying this isn't quite, the case. So what is your journey in that respect? Because obviously, you were at Goldman Sachs. Now you're sort of off in the Cayman Islands. You've got Real Vision and all this stuff. So what's your opinion on that?
So my opinion is, and it's probably changing over time, but having something really good on your CV, i.e. having been exposed to people who are a lot smarter than you, have a lot more knowledge than you, is invaluable because it gives you a credibility statement. So nothing up until me working for Goldman really mattered because nobody cares about NatWest. It's a UK bank. Yes, we were doing some cool stuff at the time. We were the leaders in the UK and probably in Europe at the time. But then I got poached to go to Goldman, and that was the biggest opportunity of my life. It's like, can you set up hedge fund sales here? And that's what I did. I was kind of well known for it in the industry. But with Goldman, it was like, well, this is easy. I can call up anybody and say, hey, I'm from Goldman Sachs, setting up hedge fund sales. Can we talk? So it was very easy to do and develop it from doing that. But that move to Goldman meant that everywhere I went, I'd been vetted. So everybody says, like you did, oh, ex-Goldman Sachs.
Yeah.
For whatever reason, it's actually really to do with the quality of people you were surrounded with. It gives you a network. And, yes, to be an entrepreneur from scratch is a great thing too. But anywhere you can build a network and get knowledge, actually supercharges everything in the end. So it's a combination of the two. Be the entrepreneur, but also, if you can, get that meaningful network from working at an amazing firm. So a lot of people will go to Google now. When I worked at Goldman, it was the #1 requested place to work by MBAs around the world. So I would not have ordinarily got in that. I got into it because I'd proven myself beforehand. But anybody else, if you work for an amazing tech firm, let's say, and then want to branch out, people always say, oh, he learned at Google or stuff like that, and you've been vetted. So that's the tip. If you can ever orchestrate that, that's the best of everything.
Yeah, I think I can relate because I worked for many different news stations before I sort of jumped full time into crypto. And when you're working for the smaller news stations and you're trying to get people on as a guest, they don't really know your station. They don't really care, especially like the little London ones. But when I've done some work at the BBC, so when I say, oh yeah, I'm calling from the BBC, they're coming on. There's no. And
then you can also say, oh, well, I used to work for the BBC and now I'm doing this, right? Credibility statement. And then, okay, here we are now.
Yeah, exactly. So speaking of here we are now, you are notorious for holding the majority of your portfolio in crypto. So that's insane. But before we get into that, I want to know why Bitcoin and when did you first come across it? I'm talking, I want to hear that red pill, orange pill moment.
So I was living in Spain, writing my kind of institutional research product, Global Macro Investor, over the financial crisis and the European crisis in 2012, when Europe almost fell apart, when the banking system in Spain, where I was living, almost completely broke down. And so I'd been watching all of this, and we'd been seeing the growth of debt and a lot of structural problems within the finance industry, like who owns what, when Lehman Brothers went bust. So I realized there was problems, and then the solution started to become printing of money. And so it got many of us down the path of, okay, what does this all mean? And gold becomes one of those things. At the time, I was more worried about the financial system itself. So I was going around with a bunch of kind of well-known hedge fund people looking at setting up the world's safest bank. And this was going to be a non-fractional reserve place for people to store assets and have services. And it's hard to set up a bank, so we kind of gave up eventually. And I had a round table for global macro investor members in Spain. And I was talking about some of these journeys that I was on, and a guy presented to us all on Bitcoin. He's another ex-Goldman Sachs guy, a guy called Emil Woods, who's gone on to do a lot of amazing things in the industry. And Emil's very below the radar screen, so he'll probably hate the fact that I mentioned his name. And so what happened was he presented Bitcoin as the answer. And I'd seen the rise from about 2011 and had been following it a bit. I started writing articles about it and invested first time in it in maybe 2012. I think 2012, I first started investing in Bitcoin. So I bought it, went up 100% in a month, and I sold it. I was like, okay, that was quite interesting. And then I kind of followed it for a bit and started getting people more interested in it. And then I kind of reinvested again, probably in 2014, and sold out into the big rally in 2017 as I got confused about forks and, what does this all mean? I don't really know. So I'm going to get out. And so that was that. I then started to learn about blockchain technology, again from Emil and a few of the others at the round table. Coming out of that round table is why people like Dan Tapiero and Mark Yusko are all, because they're all global macro investor guys, that's why they all got into Bitcoin, is because they all heard about it at the same time. We were all like, okay. Then we started hearing about blockchain technology that got us all start thinking about the digital asset space overall and where this is all going. Again, this was super early, kind of 2015, we started learning about that whole space. And so from that, I then got back in again because I'd sold out. I wasn't back in again. The price had been falling. And then Dan Tapiero started annoying me almost every day by saying, Raoul, we need to talk about Bitcoin. I'm like, I'm not interested right now. There's a lot going on with the dollar and a lot going on with bonds. He goes, no, we need to talk about this. And so eventually we did a piece on Real Vision, and then Dan got me back into Bitcoin again, which was 2018. And I started investing again and spending a lot of time in the space.
So speaking of Dan and Bitcoin and all this stuff, I watched a video on, I think it was Real Vision at the beginning of this year, actually in March, as soon as everything just kicked off, right? You mentioned printing of money, everything shut down. So I want to talk about quantitative easing because I find that it's such a like a controversial kind of topic. People, central banks sort of do it to stimulate the economy, and everything's all very exciting. And Joe Biden's proposing another 7 trillion. It's all very great, but people like in this space, people like we're all quite concerned about this. We don't necessarily think it's great. So talk to me about quantitative easing, especially how what we saw happen in March and how the year has kind of like looked since then.
Yeah, so quantitative easing means different things to different people in terms of its effects. Everybody in the stock market thinks quantitative easing is what drives the stock market higher. The central bankers thinks it's what stimulates the economy. The Europeans probably thinks it's what holds together their economy, because if not, all the banks go bankrupt. And the crypto space and the gold space thinks it debases currencies, right? So we've all got a different narrative based around this. The narrative that I've found is most consistent is the debasing of fiat currency over time. And I started looking at this in a different way. I came at it with gold. So I thought, okay, if gold is money, let's take that as a hypothesis, then gold should establish a price versus other things over time. So I chart gold versus real estate, gold versus equity markets, gold versus copper, gold versus things, right? Real assets. And you can go back 100 years, 200 years, and most of the time it trades within the range. So it's consistent in saying it prices money, the value of goods, and they vary around that. So then I started putting gold versus a basket of 27 global currencies because I saw everybody's printing. So let's see, not gold in dollar terms, but against this basket. And lo and behold, the picture comes clear that as they print, gold rises versus these currencies. They stop printing, it flattens out. They start printing, it rises. I'm like, fascinating. So it's showing you that even though the printing of money doesn't necessarily generate inflation, i.e. the cost of your TVs in the supermarket don't go up, but the value of your money falls in this kind of weird world of foreign exchange markets. And if they're all doing it, you don't see it because it's not like your currency's falling. It's not Venezuela. What you're finding is all of them are lowering in value versus hard assets, which is one of the reasons the art market's gone up and the collector's cars market's gone up and gold's gone up and Bitcoin's gone up. So it's that whole quantitative easing. So then when we saw this happen in March, we realized that with this much debt and this bigger economic shock, it was going to be massive. And it was going to be quick as well, because it's the only trick the central bankers knew because interest rates were zero. So then they also explained that because velocity of money is low, because most of the banking systems around the world aren't operating properly, the only way to get money in people's hands was give it to them directly. But the governments couldn't afford to do that, so the central bank were essentially going to pay for it via the back door. And once you started doing joining the dots and looking forward, I realized, okay, this was going to be a really unique moment in time for Bitcoin because it was going to be a key driver. I'd also followed previous recessions, and the quantitative easing or the stimulus tends to go on 18 months, 2 years, maybe 3 years afterwards. So this was only the start. And so that's why I got very aggressive very quickly in the space.
So what does that mean for the dollar then, right? Because the dollar is supposed to be, this global currency. People sort of run to the dollar. Even I know Venezuelans are obviously buying crypto, but they're also buying the dollar. All over these kind of countries, you have kiosks where people can literally change their money into dollars. So what do you think about the dollar? I mean, it's down. Do you think people say, it could potentially come to the end of its lifespan? Do you think it's still, I know we sort of talk about gold as that safe haven asset, but the dollar, do you think that it has much of a lifespan? Do you think it could be replaced?
No, I don't think it's going to replace fully. Right now, 80% of the world's transactions are done in dollars, while the US is 25% of world GDP. So it has an outsized impact on the globe. That's one of the reasons all of these other central banks are trying to move to central bank digital currencies and talk about trying to reduce the dollar's weight in the world. That will happen. Will it happen yet? Has the dollar rolled over properly yet? Or is this the bottom end of a range? I'm not entirely convinced that it's rolled over yet. I still think the dollar may go higher. I could be wrong. I've been wrong this year on it. If it continues to go lower, well, we've got this narrative of what the IMF and the Bank of International Settlements and everybody else is talking about, which is either fragmenting into basket currencies using central bank digital currencies or doing something that reduces the dollar's weight in world trade, which everybody desperately needs. If that's the case, then the number of dollars held by people will fall and the dollar will fall itself. So again, there's a whole other narrative in the background that is very, very positive for crypto. I do not think the dollar is at risk of hyperinflation, loss of reserve status, or any of that. That's just narratives of people wishing that their assets go up faster. It's not the way the world works.
Yeah, I think it's pretty interesting. Especially in the crypto space, there's this huge narrative of, inflation, and we're not seeing hyperinflation. It's not what we're seeing.
No, and we're very, very, very unlikely to see it because of this aging demographic, this massive population, the fact that the banking system doesn't work fully. To create hyperinflation is actually really, really difficult to do. So, it's not even clear we can generate inflation. Don't forget the Japanese have been printing money for 20 odd years now. They have been fiscally stimulating for 30 years. They're buying their own stock market. They're doing everything and they still don't generate inflation because of demographics. And demographics is the key driver of everything. So no, I don't believe in any of those narratives. Could that happen in 30 years time, 40 years time? Maybe. Still doubt it.
Okay, I think it's pretty interesting. But, when we look at these safe haven assets, there's this huge, tug of war between gold and Bitcoin, especially, I guess in your community as well. I mean, I know you mentioned Dan Tepiero there. So what are your thoughts? Do you think, they could work simultaneously as these safe haven assets, gold and Bitcoin? Could Bitcoin potentially, surpass gold? I mean, I know Mark Yosko has sort of made comments on that. It could if it reaches a certain market cap.
They exist together. They do similar things. One is for the modern age, which is Bitcoin. It actually integrates perfectly with the new digital system. And so it makes much more sense. It also is generational. Sure, gold's been around for 5,000 years. It's not going away. It will always be a store of value. But, if you're younger, you probably have a propensity to understand the value of a digital asset better than somebody who wasn't brought up with digital assets. So I think there is a generational shift. So I do think over time, because Bitcoin is not only this kind of reserve asset, store of value, pristine collateral, which is what gold is, it also is a technology. And it has that whole technology layer that offers a different potential future. So I think over time, the combination of those are the knockout punch, which means it outperforms over time, which is one of the reasons I sold all my gold. I've seen, Bitcoin is basically outperforming every other asset on earth. And we haven't even started the peak point of the halving cycle pattern. So, the point of owning any other asset right now is almost zero. So gold will probably underperform, but gold probably goes up too.
So what is it about Bitcoin though? So how much of your portfolio is actually in Bitcoin? I read recently that it was 98%, but I don't know if that's just like crypto in general.
Yeah, no, 98% is crypto in general, of which it's an 80-20 split between Bitcoin and Ethereum.
Good choices. So why Bitcoin? What are like the top 5 things you have to know?
I'm not going to tell anybody anything that they don't know, although I think I was the guy who came up with the pristine collateral idea. Is what I like about it is obviously the restricted supply. There's nothing like it. The distributed nature of it, the divisibility, exchangeability, the digital asset, the way it can be moved around the world is phenomenally powerful. And the immutability of the whole thing and the blockchain technology. So all of that is great. Everyone knows that. At application level, I think it's very interesting just as a replacement to gold. It works. You can store it offline, much you can do with gold in a gold vault, but it is easier to transport and there's a number of other benefits. I think, so the store of value thing is pretty obvious. The collateral thing is a very different thing that people haven't got their heads around. So the world runs on collateral. So collateral is what allows you to borrow money. The whole world runs on one true source of collateral, which is US government bonds. European government bonds, Japanese government bonds, they also are. But US government bonds are the most prestigious collateral of all. Problem is that collateral, they can issue more of it at any one stage. And in a recession, when the value of the collateral, so if you want to borrow money from me and it's a bad recession, you can't get money, and you want some of this collateral so you can borrow money, you should pay me more money for it. The current system is the opposite, because the central bank lowers interest rates and the price of collateral actually gets cheaper. So I'm taking risk in lending it to you, but I'm not getting paid the reward. Bitcoin changes that dynamic because I'd be able to charge a different rate for lending you my pristine collateral, because you can't mess around with it. It's distributed. There can be no more supply. It's got recorded ownership. There's a whole bunch of things that doesn't happen with the treasury bond market. So, I think that's one of the key things for me that I think, okay, I can see something massive, that this could be the base layer of an entire financial system.
So then with all of that in mind, where do you say the base layer of an entire financial system? Like that's a huge statement, because there are people out there, whenever I post about Bitcoin, and, people were screaming, scam, this, that, and, all these things. And obviously to say these kind of things, they obviously don't understand it, but, it's difficult. Well, it's not necessarily difficult to use, but grandma can't use it yet. That's sort of like what we say.
This is why it's priced as it's priced, right? This is why it goes up like Metcalfe's law, which is the adoption effect, right? So it's still being adopted. So we haven't got to that yet. My job as a macro guy is to live in the future, as I talked about before. So we're looking at possible futures, and that seems like a pretty high probability future potential. And it's the path of getting here to there is where you make all the money. It's not the there.
Yeah.
Because when it's there, it's a low volatile, risk-free asset. I want to take it when it's risky and nobody believes it, because that's when you make all the money. When everybody adopts it, that brings all the money into the space.
Yeah, I'm totally with you. But okay. So you're living in the future. Tell me, how do you see this asset though? Do you see it as a store of value? Do you see it replacing the dollar? I know you said not quite. Do you see it as a global currency? Do you see it as a global reserve currency? Like, what is Bitcoin's place?
Well,
What could its place be?
That's bit we don't know. Could it be the pristine collateral that the world uses to offer leverage on? Yes, that's certainly quite possible. Is it likely to be the payments layer? Don't know. But could it be, we're seeing Bitcoin wrapped on Ethereum. There's no reason it has to be the platform. It can be the asset. So will we see other central banks put it onto their balance sheets? For sure. Because if it goes up a lot and it's hard money and you're a Latin American country that's had problems with devaluations and all of this, well, game theory would suggest that somebody's going to try it soon. And it's going to make their currency go up and it's going to help them. And in which case it encourages others to do it. So I do see adoption by central banks. I do see a dual world where fiat currency and Bitcoin exist. And one is an on-ramp and off-ramp. So you happen to live in a country and you live in that country, you have to pay your taxes in that country, but you want to store your money in this universal currency. I think that's pretty true too. So could Bitcoin be everything? There's definitely a probability of that. How high that probability is, I don't know, because we're looking 20 or 30 years out at that point. So it's too difficult to assess. But I do know we're going to move towards that. And again, in investment terms, that moving towards it, the rate of change is where it gets very interesting.
So you got yourself into a bit of a stir online, talking regulation, talking XRP. We'll get to XRP in a bit. But with regards to regulation, so you said that regulation will come and you will still use the crypto essentially, which is pretty interesting because actually today I read a news article that France have now brought in a potential new kind of regulation, which would actually stop French people from using any anonymous crypto accounts. So given the nature of crypto, that's quite huge for regulation. So how do you see regulation as this necessary evil in terms of mass adoption, or do you support regulation? What are your thoughts?
The world is always about trade-offs. And something like Bitcoin doesn't care what you think it should be. It will be what it is, right? It's a distributed system that has a life of its own. So it will go wherever it goes, depending on the demand and use cases. So if people wanted to go up in price, then more people need to buy it. It's the very nature of the asset. If more people need to buy it, then the reality is it won't be driven by retail investors. It'll have to be driven by institutions. Those institutions cannot buy it without more regulation or enough regulation. So if not, their trustees won't allow them to buy it, and it's dead. So in which case it remains.
Is it dead?
Well,
or is it just what it is now?
Dead as a institutional asset. So in which case it's a retail asset. That's okay too. It's just a different future. But if you want to have a hyper Bitcoinized world, the traditional financial system has to use it. And that's going to take regulation. I am prepared to take the trade-off of privacy because I don't think we have any. We're currently on a Google Chrome browser. They know exactly where you are, that you're talking to me, where I am. They know my email address. They know everything about it. They know what websites I've just visited. They know every single aspect. They know, we are tracked by everything and everybody. So I'm not that fussed. And blockchain tracks all of the movements of the money anyway. So my anonymity, if it's to avoid paying taxes, well, you can play that game and maybe you get caught, maybe you don't. That's up to you. But I also know that if I live in a country where taxes are due for services, I'm happy to pay them. Other people aren't. I get that. But unfortunately, that's why you've got a passport. That's what it tells you is we will protect you. We will give you services. You may not think you get the value for money, but if you want to live here, you have to pay taxes. That's what it is. What people want it to be is a different matter. So I don't see a problem with it. I don't see a problem with regulation. I've worked in financial services my whole life. Regulation is just part of what it is. I also know that this is an incredibly smart community of developers. And if they try and stop some form of custody wallets that can't be anonymous, somebody will figure another way out. Because of its nature, it's almost impossible to fight that battle. So what we will find is the main players in the space will be regulated, both the investors and the service providers, and there'll be a ton of smaller service providers that offer different solutions that will be not regulated because they will find jurisdictional ability or other ways of doing it. So I don't worry about it whatsoever. I think the market might even sell off on it because there's a panic. And I think that's going to be a huge buying opportunity because two things happen. One, adoption is good. Secondly, people will solve the problem for individuals who want anonymity.
Yeah, but I think what kind of gets me is that, solving the problem for anonymity, I think that anonymity, given the news about France, is going to be taken away. I just don't think we can have that kind of anonymity.
You don't have any anonymity now with your money. You have a bank account, you have a credit card. Yeah. The amount of cash transactions is limited in Europe. You're only allowed to take out certain amounts of cash. So there is, anybody who thinks there's this free world of money, it's nonsense. Nobody can.
But that's the goal, though, isn't it? But that's the goal. And so don't you sort of find
somebody's narrative? Somebody's narrative, right? The goal of Bitcoin, there is no goal. It's distributed. It goes wherever it goes. It's a network. It's not a person. It's not a philosophy. It's none of those things. And everyone hates that. But I said, look, you can have your own view on it. And if you can corral enough people to do the same thing as you, but Bitcoin is not that. It's a living, breathing network.
Yeah, it's pretty interesting, isn't it? Because the community is so tight, right? And there's narratives and there's ideas, and the propaganda is wild. Like it's like state of the art propaganda, like whoo. And so I think it's really interesting to hear somebody actually say, well, actually, who says that's the goal? We don't even know the person that created it. So how do we?
And they're not in charge of it. Nobody's in charge of it. So that's all narrative. So why does these narratives exist? Because different people want different things for themselves and their future. There's a lot of people who are angry with how things are, but also there's something about Bitcoin that most people don't understand. Why did Facebook get so big? It's because it used behavioral economics, which is the like button. Daniel Kahneman taught all of these guys from Google, Facebook, Twitter. In fact, every major platform was taught by the guy who won the Nobel Prize for behavioral economics. They explained how the dopamine system works and how like buttons and follows and likes make us feel rewarded, right? And so you can therefore you can affect human behavior. Yeah. Then comes, and that was in 2007 that he basically held this famous summit for all of the leaders of Silicon Valley who adopted it en masse and took over the world. Then in 2009 comes Bitcoin. Bitcoin is the perfect behavioral network because it rewards you in money. The more people you bring into the network, the more your money goes up. That by definition will create tribalism because everybody is now incentivized for their network to go up more than the other network and for all other networks to fail. It is an incredibly powerful tool for building a network where you have money attached to it. So imagine if every Facebook like was $1. Imagine what that would do. Or everybody you brought onto Facebook paid you in Facebook shares. That's what Bitcoin is. It's incredibly powerful. And that's why it creates narratives, because like a religion, it's all about getting more and more people into it.
Yeah, I mean, you touched on two things there. So the tribalism is something I really want to talk to you about, but I want to go back a sec. I can't remember what the Netflix documentary was. I watched the Netflix one about, maybe the social media.
Social network, whatever it was, yeah.
Yeah, and wow, that blew my mind. I mean, I knew already the programming and this, but it's the dopamine, it's the like pulling down and seeing the refresh, getting the hit, the notification. It's horrible.
If you haven't seen it, watch The Secrets of Silicon Valley, a 2-part series on the BBC. That was 5 years before the Netflix documentary. And it is unbelievable. unbelievable and explains this in great detail, everything that is going on here.
Yeah, and like on this documentary, they even had to have, I think there's a job now about digital ethics. You know, if it's ethically okay to, because they know that they're programming us, they know that they're doing that. You know, every time they get a follower, every time they get a notification, it's a dopamine hit. So they know that they're sort of creating that addiction. So they now have people in, you know, they're actually job vacancies for, you know, people understanding whether this is ethical or not.
Well, this is a real problem, because once you've unleashed the genie out of the bottle of behavioral economics and big data, everybody figures out how to use it for different means. And it splinters everybody into different groups. And it's almost impossible to deal with because it's a network. Right? So it's not centrally pushed. So Facebook's not centrally pushed. Yes, there's an algorithm and stuff like that, but it's a network that everybody's incentivized to get more people into their network because it makes them feel good by getting the dopamine hit of the likes. It's crazy. And that's where we are. And Bitcoin is the like the most perfect echelon of this, of anything I've ever seen. And most people don't really understand that.
So you mentioned tribalism. So this is hot, right? Because you were attacked for wanting to know a little bit about XRP. So what did you learn about XRP?
Not a lot. I mean, I just had one interview. But what was interesting is I said I've got an open mind to it. When somebody, in the investing world, when everybody says they hate something, is usually the time to buy it. I haven't bought XRP. Maybe I never will. But I reached out to somebody I really trust, Santiago Velez, and said, "Look, tell me about it." And he's a super intelligent, very rational, very balanced person. And he sat down with me for just over an hour to explain how much of a use case it has and how it's being used and where it could go. And again, he's not saying it's definitely going there. He's not part of the XRP army. He's just saying, listen, Raoul, the narrative is behind the reality. And the narrative is it's a scam because a centralized company issued the tokens. He's like, yeah, that's pretty normal. Most companies issue shares. So yes, it's with the token. It's a defined amount. We know how many it is. And this is how it works. And then this is who's using it. And this is its value system. And this is how it could appreciate in value. And I'm like, okay, I get it. This is, you know, I know there's still people who say he doesn't understand. It's a scam. It's not. It's just a different thing. And it's not Bitcoin, nor is Ethereum Bitcoin, nor is anything else Bitcoin. Bitcoin is Bitcoin. And so we don't need to compare them. It's like comparing, saying, well, it's not an orange. No, it's an apple. No, it's not an orange. I can't hear you. It's not an orange. No, it's an apple. It's a different fruit. That's what's going on right now.
Yeah, I think it's pretty interesting. I think it's kind of quite interesting because the Bitcoin community is all about, you know, generally speaking, freedom, which kind of implies freedom of everything, right? Like freedom of speech, freedom of thought, freedom to, you know, understand more, especially when we look at Bitcoiners' views on politics and everything that's been going on at the moment, whether it be, you know, canceling people and so on. There seems to be some kind of common ground that Bitcoiners sort of have when it comes to this thing, which is why I'm surprised that we're not allowed to ask questions like, wait, what is XRP? You know, what is Ethereum? We're sort of not allowed.
Or could there be a future financial system where there are many protocols? There's an interoperability layer across them that allows assets to move. So you can have Bitcoin that trades on XRP's network and on Ethereum's network. Can that happen? Yes. Will it happen? Yes. Will somebody?
It's already happening.
It's already happening. So get used to it. But to say there can only be one, you might say, I think there's only going to be one in the future. So I want to bet on that. In fact, I'm so passionate about it, I'm going to short the other ones. That's how the world actually works. By saying, you can't even talk about XRP because you're an idiot for not seeing what we see, is religion. And I don't think that's right. But again, if you remember, its behavioral incentive structure is if you can get your network to be the one, you make all the money.
Then your bag's pumped, basically.
Yeah, because you take over the world. So therefore, you're incentivized not to play across networks. But once you start looking at the rest of the world and understanding, okay, this is a whole future financial system that's all going to net together in this incredible new way, then you're incentivized to say, well, other things may be undervalued versus Bitcoin. Some may be overvalued. And that's how we can invest accordingly to take advantage of the whole space. And again, somebody may say, oh, it's all going to be built on Bitcoin. Great. Then just invest in Bitcoin. If you think they're all a scam, that's what I've been saying to people. A lot of people say, well, Ripple's a scam, XRP's a scam, so fantastic, short it. That's how financial markets deal with that. You short it and you can make money. But then they go, no, I wouldn't do that. Oh, you can't short a scam. I'm like, really?
Yeah, I mean, like I said, that's how financial markets work. That's the free market for you. You like it, you don't like it. Do your research. You're incentivized to do your research. So no one's forcing you to buy XRP. I want to get your thoughts actually on privacy coins. Have you looked into them much? I mean, I know. Go on. Tell me about your thoughts on privacy coins.
There will be a place for them, and some will get regulated, and some will be used. I think there's a place for all of this. Privacy coins matter, particularly when they really matter when you're in a jurisdiction that is oppressive in terms of comes with violence, adherence comes with violence. Well, then having privacy in the extreme is incredibly valid, and I think it will stay around for that. Will the US try and shut down this kind of stuff? Of course they will. And we've seen this before. I've talked about this a couple of times. In the UK, back in 2014, something like that. No, earlier. Okay. There was a whole bunch of synthetic drugs that came onto the market, and they were called plant food at the time.
Okay, I don't recall.
Right, it's a synthetic stimulant, right? It's a coke MDMA kind of thing.
Yeah.
It came out, and obviously they weren't banned. So everyone was importing them from China. It was a fraction of the cost of drugs, and it went viral in the UK. And
what was it? But what was it? What was the substance?
It was a synthetic thing that triggered the same sensory system MDMA did. And so this went viral all across the world. Now, so what the regulators did was they tried to ban it by saying this chemical formula substance is banned. So then the Chinese reinvented another one, and then another one, and another one. And the regulators had to then figure some all-encompassing way, but they couldn't get rid of it. New Zealand, in the end, just said, fine, it's illegal. We can't regulate it. So you'll see different jurisdictions deal with stuff like this. Internet privacy is the same issue. There's many issues on the internet the same. China, you don't get the choice. The US, you get probably more choice than you need to have. Different countries and Europe will probably be somewhere in the middle. And it's just how it is.
Yeah, I was talking to a couple of people from the Monero core development team, and they gave quite an interesting opinion. They were sort of like, well, we have cash. Cash is inherently anonymous to obviously some extent. And the same AML procedures that are put in place for cash will be put in place for privacy coins. So say you want to go and buy a house with a load of Monero, the person you're buying it from might have several regulatory, and compliance things whereby you have to sort of give proof of funds and say,
And they'll say like they do with cash. So in Europe right now, most countries somewhere averaging about 5,000 euros you're allowed to use for a transaction. So you regulate that and say, fine, if you want your cash money, no problem with that. Anything over 5,000 euros has to be declared for AML. And that's it. And that will happen. Now, if you don't want to bring it into your system, i.e. into your tax system, same with cash. Nobody has to know about it. So all of Spain still operates with cash, stuffed under their mattresses and in bank vaults. Yeah. But if you want to bring it into the system, it's bloody hard unless you'll find somebody else who'll accept cash. So things trade at different prices.
Yeah, absolutely. And I kind of see that being the situation with cryptos, right? Because I think that's the hardest thing. You can trade anonymously, even with Bitcoin. But as soon as you get to the on-ramps and the off-ramps, that's where you hit the KYC. And other than that, there's no way really to bring it into the system unless, like you said, you're dealing, I guess, peer-to-peer, literally. If you could offer me a service in Bitcoin.
Yes. And the problem is I'm not sure whether you can get away with selling a house for no transactional
Exactly.
cost. So it's difficult. It's difficult. So yeah, I can give you Bitcoin and nobody knows about it, but what can you do with it? What can I get in exchange? It's actually it's tricky.
Yeah, it is. So just finally, where do you see the space then in 20 years from now? I know it's impossible to kind of see, but and the financial system in general, where do you see it all?
I think we're headed towards the internet of money by a very broad definition, which is digital assets have value and digital assets are transferable, exchangeable, recordable, all of those things. And most physical assets will be digitized in terms of its value capture and transfer of value, whether it's the art market or the trusted ownership of everything will be on blockchain technologies. Which ones? Who knows? But that's definitely coming. The tokenization of all assets and income streams and revenue streams and intellectual property rights and everything is coming, and it's all coming. So it's going to change our world as much as the internet changed our world.
Yeah, I totally think so. And actually, I do have one last question for you, because you mentioned it earlier, CBDCs. What do you think is going to go on there? Because I have this kind of idea in my head. Just maybe I've watched too many films, I don't know, but I have this idea whereby I feel like we're going to have a kind of like tug of war between, because like you said, everything is inevitable. It's going to go digital. I always say this, everything is digital, from, dating, shopping, whatever it is, it's all digital, socializing. So working, so I feel like there's going to be like this tug of war between, government, their own cryptocurrency, CBDCs, and then the crypto community who are pushing that narrative that we spoke about earlier.
I think they all coexist. I don't think government's going to get rid of Bitcoin. I think it ends up being the reserve asset that has a lot of value to a lot of people. Some governments will adopt it. Some will try and regulate against it. I just think it's going to be there. Like gold, it's always been there. People have tried to ban it from time to time, never really works. So I don't think they have an issue with it either. The central bank digital currencies are a whole different thing. What that is at the top level, yeah, it's much easier for me to send you money, right? It's 1 second thing. Great. It means that stuff like Bitcoin becomes seamless into this. So for taxation capturing and all of this stuff that makes nation states, fine. It's going to completely change how economics works. Because monetary policy run by central banks, fiscal policy run by governments, that all blends into one. Because this is the rise, again, of behavioral economics and big data sets. Because I can incentivize you differently to me. You can have a different rate of interest. We can do it down to the individual in terms of stimulus or penalty, reward systems. But obviously, governments can use it for nefarious means too. So if they catch you driving 5 miles an hour over the speed limit, they just take it straight from your wallet because...
Oh, that's scary. That freaks me out.
Scary. And that's the problem. But it's incredibly powerful in a recession like this to have gone, okay, hairdressing salons, right, here's 10 grand in your account immediately. And we'll monitor your wallet. And if you're running out of cash, we'll redo that. For stimulus, that would have really helped.
Yes,
as opposed to giving it to a bunch of banks via quantitative easing and assuming they're going to do the right thing, which they won't, because they'll either hoard it or give it to their best customers. So the people who actually need it can't get it. This, again, matters not whether you like it or not, it's coming.
It's happening. It's freaky.
Programmable money at central bank level is definitely going to happen.
Well, there you go. I was going to ask you your last thoughts, but I think that's it, isn't it? Programmable money at a central bank level is going to happen.
Yeah.
There you go.
Please get their heads around that.
Raoul, I want to thank you so much. It's been such a pleasure. And thank you so much for coming on.
Yeah, really enjoyed it.
All right, guys, don't forget to tune in next Thursday. We will be live at 12 p.m. EST. We'll see you then.